Hey everyone. Well, 2024 is coming into a close, and what a year it's been. In this last year, we've seen 5 rate changes. So we've gone from a 5% overnight target rate down to 3.25. That included two jumbo rate cuts in this past year. So, what an incredible year. I think it was a really great time that we needed rates to come down. I think they could have come down a little sooner, but I get it. I'm not making the decisions. So we'll see what happens in 2025. Fixed rates this time last year, they were about 2% higher than what they are right now. Lending rates right now are anywhere from 4 to 5% on traditional mortgages. Depends on the type of product you want. So we've definitely seen a lot of rate reductions in 2024, very well received. What are some other things that we've seen? So we've seen the prices of houses. Yes, they've gone down since the peak of the pandemic, but they're still much higher than they were before the pandemic started. And we did see a dip in the price of homes. But what I believe is that we still have a really good value of homes. I mean, I remember in 2019 or at the start of 2020, when we were all ecstatic that Ottawa hit, the single family dwelling was an average of $500,000. Now it's much higher than that. So even though prices have come down in the last year, 2 years, it does not mean that they are pre-pandemic prices. So be very mindful if you're looking to buy a home. You really want to make sure that you focus on budget, you focus on cash flow. Interest rates are very important, but it only matters if you're able to pay for your mortgage. So you really want to make sure that cash flow and your budget are being very attended to in coming years for when you're looking for a home or shopping for a mortgage. A couple other things that have happened this year. So obviously down south, we're going to see a new president in the new year. We have an election coming up. So it didn't happen last year, but it's coming up this year. So a lot of the policies and so what I want to say. A lot of the other changes that we saw this year were a lot of mortgage rule changes. So, as a mortgage agent, I always want to stay on top of these things. And it was like one thing was being announced after another, but all good changes. One of the biggest changes that I'll probably see in my market and many people will see across Canada is first-time home buyers can now borrow at up to 30 years of amortization. This is a really great change because it either allows you to afford a little bit more or it makes your mortgage payment a little bit more manageable. I think this is a really great change for the first-time home buyers and anyone buying a new build. The reality is that when I help my clients with a 30-year mortgage, I can assure you they're not in a mortgage for 30 years because we build in strategies to be able to help them find ways to pay their mortgage off faster. So what a 30-year amortization mortgage does, it doesn't mean you're going to be paying a mortgage for 30 years. Now it could. I'm not saying that it won't, but I'm just saying when I talk to clients, there's opportunities to be able to put your mortgage accelerated biweekly right there. You're not going to spend for 30 years. Accelerated biweekly fast tracks your mortgage and, allows you to pay extra payments every single year, which will reduce your amortization. We have clients that have enough of a budget that they can do a double up payment or even increase their mortgage by $50 a payment. That $50 over 30 years will actually knock off probably around 5 years of mortgages. Double that up with the accelerated biweekly mortgage payments, and now you're knocking off more years. So just because you're entering into a 30-year amortization mortgage does not necessarily mean you are going to have your mortgage for 30 years. If it does, then that might be the plan that's right for you, but it doesn't always mean that way. Another big change that we saw is going to be that happened in December. We're going to see more of it take effect in the new year is the insurance cap. So the insurance was meaning that if you bought a home, you had to put 20% down if the house was $1 million plus. So that cap for insured mortgages has moved to 1.5. Now we're probably going to see this really, I think, have more of an impact in major urban markets. Like, we're talking, Vancouver, the Calgarys, the Torontos, those kinds of places. We're not going to see that huge impact in smaller markets. I think in Ottawa, I think that might help our like $1 million to $1.2 million category. But, keep in mind when you are putting less down payment on a house that's up to 1.5 million, you need to have the income and cash flow to support that. So just because you can buy a house for $1.5 million with like minimum down payment, but it does not necessarily mean you should. So I really encourage you to speak to a mortgage professional to make sure that is the budget and cash flow the right thing for you? I really focus on cash flow and budget when I talk to my clients. I think it's really important. And I find it crazy. People tell me all the time, they're like, oh, I've spoken to mortgage professionals before you, and no one's ever asked me about my budget. How has never anyone not asked you about your budget before? Like, what do you want to pay every single month? It's imperative. I ask every single person this. I ask myself this question when I'm talking about buying something. How much do I want to spend? How much am I willing to spend on this? So it's a really great question to ask yourself, especially going into 2025. Really be mindful of the dollars and cents. And I know we've had a really hard go for the last few years. So people are getting extra jobs and being very budget conscious, and I applaud you for that. And as more money is coming in or being saved, now's not the time to, divert from that. You want to maintain that mindfulness of, budget, monthly budget, and all that kind of stuff. So 1.5 million, that changed. There's been a few other changes. I think what we're going to see too in 2025 are going to be a few more changes, especially with the second dwelling opportunities to build a basement apartment or, a home in your backyard. These kinds of little places that we can find opportunities or ways to help have more dwellings for people, because there's a lot of people coming into the country. And 2025 is going to have a trifecta of people looking for homes, right? So we're going to see the people, who've been waiting. And some of these people have been waiting since 2019. Keep that in mind. So they are eager, and they are, I don't want to say desperate in a bad way, but they are eager and just want to have a home for their family. And I respect that and I encourage it. Then you're going to have the regular amount of people that come into the market every single year, the people that are, adults now, or, they graduated from university, or maybe a family member passed away and they have a large inheritance and now they have the money. So there's a regular amount of people that come into the market every single year. So that we're going to have that. Plus, don't forget, we are a country that has a lot of immigration. So more and more people are coming into the country. So there's going to be a really vast majority of people that are going to be looking for homes this